And Stephanie, the markets are weaker today. Dow down at this point by about 350 points, but maybe pretty calm when you consider what's happened over the last couple of weeks. A lot of volatility, but not a huge decline over that time. What do you think about the reaction this morning? What do you think about the jobs report? Just a lot to kind of add up.
And we seem to be getting whipsawed every single day. One day we're up, one day we're down, and I just don't think we're out of the woods for the foreseeable future, because there are so many uncertainties. And so while it's been remarkable that earnings have held up and actually are going higher by anywhere from 2 to 4%, you're seeing the multiples come down because of these uncertainties of Russia, of inflation, of the Fed being behind the curve. So it is really hard. You have to pick your spots. I'm trying to do that. Large cap companies, quality balance sheets, number one or number two in their industries that have great free cash flow. Because if there was one thing that we learned last earnings report, it was free cash flow generation is incredible. And the companies are actually not only buying back stock and increasing their dividends, but they're also putting it into CapEx, which is positive for the long term. So it's really, really hard to navigate the short term. You kind of have to put your blinders on, focus on fundamentals, and that's sort of what I'm doing.
Yeah, we had Jeremy Siegel with us yesterday, and he's pretty pessimistic about the Fed, thinks they are really behind the curve. But he also said that for the long-term investor, this is a great buying opportunity because of those lower multiples that you just mentioned. In terms of just overall, are you a net buyer or a net seller here?
Yeah, I am shifting my portfolio, actually. So for the last year and a half, you and I have talked about a lot how I've been more cyclical, more value-oriented. And now I'm trying to get a little bit more balanced because, of these uncertainties. So I want to have that barbell approach where I still want to have some cyclicals, some reopen names, and some value companies. But I also want to find some growth companies, too, especially on the technology side and in healthcare as well. In technology, I've been underweight for a very long time, both technology and comm services. And so on the margin, on the weakness, I've been adding. I've been adding to Apple. I've been adding to Facebook. I've been adding to Broadcom, which had a wonderful quarter last night where they beat and they raised, and they still have $7 billion that they're going to use to buy back stock. Healthcare, I love Zoetis. It's expensive, though, right? So I'm very careful. But it's also down 20% on the year. And animal health is a $50 billion market. So I'm trying to just balance out the portfolio a little bit more and looking for opportunities.